Ladies and gentlemen, the crypto space. We're live on a Wednesday, April 20th at 11:12 a.m. A little bit early today, and boy, oh boy, I tried to get the stream off, but I had so many damn technical difficulties. So annoying, but in any case, we got a light crowd today. We got a simple, short topic. And I'll try and help you guys out to the best of my abilities during these crazy markets for the few people that are actually remaining in the crypto space, understanding that you actually have to traverse the bad times to get to the good times. I mean, could you imagine traversing 2018 and 2019, and then at the end of 2019, whoop, November, December, the lead up to the crash, and frankly, in September 2019, but then the market reaction in March of 2020, and then epic bullishness in May of 2020. And that's just the way it is. You traverse the bad times to get to the good times. Just pop it over to the main screen. I got the 10-year up. Nothing special that I really want to hone in on. Obviously, we see the massive inverse head and shoulders, the historic 41-year moving average breakout as well as the trend breakout. So they all converge. You have the 200 SMA, the 200 EMA, and the trend on the monthly, and we're above it. Obviously, you need a monthly close to have a meaningful indicator on this particular time frame perspective on the chart. And we'll see what happens. Obviously, the entire market is screaming. You guys know the deal about the way I talk of the macro situation. But I want to focus on some positive stuff and some things that are educational and interesting. And, I hit a tweet this morning about currency and what is a currency, because the last thing a currency is something that a government creates. A currency is an entity. It's an entity with properties, and the properties are pretty easy to identify. Obviously, a solid currency is fungible, a solid currency is transmissible, a solid currency is capable of being used for payments, and clearly every single asset in the crypto space fits the bill. You could pay at a grocery counter with almost everything in the crypto space. Has anyone heard of BitPay? Has anyone heard of how easy it is to convert from any currency to physical Bitcoin? And then you could use like a Strike app, or just literally hold your capital in the crypto space. You convert it to GUSD, you send it to Gemini, and you wire it to your bank in 2 hours. You don't pay credit cards in 2 hours. So you buy things on a credit card and you pay them from money that you could get to a bank account in literally 2 hours using the ancient wire transfer system. So you could literally use any currency in the crypto space to pay for anything, anywhere. And you could, there's even euros and a variety. It works in every country. So I don't really have much patience left for persons that don't have a capacity to see these systems and protocols as currencies, and clearly they have characteristics that go above and beyond that of a currency. And we won't dive into the other characteristics, clearly security, so on and so forth, and commodities. But what's pertinent is a currency. So what goes into a currency from a sovereign perspective is very comparable to what goes into it from a digital perspective, particularly what goes into it being successful. First and foremost, psychologically, is demand. Why do people need dollars to do business with the US? Why do people need Japanese yen to do business with Japan? Why do people need euros to do business with the Federation, the European ECB, so on and so forth, and all the countries that accept the euro? Why do people need pounds to do business in Great Britain? That's where the demand comes from, and that's why these countries have gotten away with printing so much, and especially the U.S., given that they were able to finagle one of the largest federations in history. And that's the second component that goes into a successful currency, really, is federation. So obviously demand, but demand is there and supported and really um, not matured, but fostered by federation. The greater the federation, the greater organization, the greater the common denomination of goods and services in a particular currency. So federation and monetary policy are absolutely critical components of a successful currency. So monetary policy meaning if you're hyperinflating and there's excess currency units, the relative value of it will decrease relative to other currencies. And that's exactly the charts that we look at, not this particular chart, but pick a chart, pick the Bitcoin chart. So Bitcoin's price is denominated in dollars on this chart. And that's the tug of war, the monetary policy of the dollar, the monetary policy of Bitcoin. It's not just the monetary policy of the dollar, it's the monetary policy of both particular entities. This is a pair, this is a currency pair. And obviously, the monetary policy of Bitcoin has very different characteristics as compared to the monetary policy of the denominator. Monetary policy unto itself is weak, meaning obviously during the initial stages of Bitcoin 2014, 15, 16, it was the same monetary policy. Nothing changed with regard to the monetary policy. So what changed with regard to Bitcoin? Federation, which I guess has overtones of adoption, but federation, the larger a federation grows, the more demand there is for the currency that has a distinct monetary policy compared to other currencies. And clearly, you could denominate this chart in your currency of choice to compare the two components of the monetary policy. You could compare them at a monetary policy level, which obviously Bitcoin is disinflationary over a 4-year period. On a micro period between 0 and 4 years, it is inflationary. What's the difference between that and the vast majority of sovereign monetary policies? Sovereign monetary policies are inflationary. They don't take currency units out of circulation, they just add currency units to circulation. At least Bitcoin reduces the amount of currency units added to circulation every 4 years. And it's not just a trivial drop in currency units not being added to circulation, it's a 50% drop. So that's an extraordinary disinflationary pressure. So over 4, 8, 12, 16, 24 years, it's pretty much inevitable where Bitcoin is going to head relative to the increase in circulating supply of other currencies used as a denominator. Now, what do I know? I know that there's better monetary policies than Bitcoin. That's pretty much quantitative in countless regards. I know those monetary policies have other considerations that Bitcoin maximalists would say are security, not really reliability, because the speed of transactions tends to be faster, albeit that's where L2s like Lightning Network come in. So they have functionally comparable parameters, at least quantitatively comparable parameters. But what's not comparable is the depth of the monetary policy for currencies other than Bitcoin. They are much more robust. They are much more sophisticated. They are much deeper, and they have overtones of MMT. And when an MMT is not executed by a sovereign, we see exactly what's playing out because we're having currencies utilizing MMT type concepts, and they're very effective when protocol revenue is disintermediated and provided to network participants. Come on, you think a government's going to do shit like that? No, government's going to take your money from taxation, whereas the monetary policy in the crypto space is giving you money for participation. Whole different ballgame. In the Federation, you can have great monetary policy, but without federation, you don't have the demand. So who has the original federation? The original federation is the curve monetary policy, the curve narrative. There's the curve federation. Oh, the immense demand for the currency is quite extraordinary. And it's not demand from people. It's demand from other protocols, sovereigns that are mandated to put the currency on their balance sheet for purposes related to the usefulness and capacity of the currency. Having the curve currency on other protocols, other sovereigns' balance sheets, give those other sovereigns a capacity to influence the monetary policy of the curve currency. And that's extraordinary because that shit does not happen at the sovereign level. You got dollars on the ECB balance sheet. You think that's going to affect the Federal Reserve and the way the Federal Reserve handles monetary policy? Fuck no. So that's a very interesting perspective of how to look at this stuff. I compare everything I see in the crypto space to legacy finance. I compare everything I see in legacy finance to the crypto space, and that gives us a very interesting perspective because the last thing we don't have in the crypto space is history. You just can't look to the crypto space for the history. You got to look to the central banks throughout history, and that's where you're going to see the best precedents, the best comparison of historically existing technology and implementation and policy, and you're going to compare it to what we have in the crypto space, and it's obvious more than ever that what it's everything that came before DeFi is deprecated. It's just not robust. Frankly, everything that came before Bitcoin is deprecated, and Bitcoin is a relatively rudimentary monetary policy. Obviously, the double spend and mining and so on and so forth, that's extraordinary, but that's separate and apart from the monetary policy that with regard to the halving and the emissions and the inflation and the disinflation. Uh, it's different. So what's pertinent is even Bitcoin that is over a decade old at this point has a superior monetary policy, a stronger monetary policy than any sovereign throughout history has ever created. And then you have the explosion, DeFi explosion of monetary policy concepts that are not just trivial, they're robust because they've gone through cycles of iteration and evolution. So these are profound monetary policies. That's the technology. That's the innovation of the crypto space. And then we have the federations that are building. You can have a great monetary policy without a federation. It's only going to go so far. But you got the Curve Federation, which is 20 something protocols about now that are mandated to put the Curve currency on the balance sheet. I was excited about the Solidly Federation, and we'll see what happens. That shit just is a hot mess. But there's a lot of people that believe in rehabilitating or bringing it hopefully to what was envisioned, and we'll see. We'll see where it goes. I'm not. I'm not here to make statements for or against it at this point. I look forward in 2 years. It may become very interesting, according to what was documented in the original papers about how the protocol was supposed to function. Beats has a nice federation. Frax has a heck of a federation with its gauges. Very early stages. We're not seeing bribes yet, but the emissions of Frax on the incentivized LP positions, I mean, that's going to require a lot of Frax to be put on the balance sheet to control the emissions, and that does the exact same thing Curve does. There's emissions, and those emissions actually have a superior monetary policy than Curve. So Curve has a hyperinflationary emission schedule. It's disinflationary because of the amount of sovereign protocols that are mandated to put Curve on the balance sheet. So basically, there's little to no inflation. It's disinflationary with transitory periods of deflation. The kicker about Frax is that it's deflationary. It's not hyperinflationary. The emissions that are directed towards LP positions are because Frax was able to purchase Frax FXS from the open market because it has an active treasury. It uses its treasury to generate cash flow, and that cash flow is used to maintain the peg and run the AMOs. And that running the peg purchases FXS from the open market, mints Frax, burns FXS, and it's a net deflationary protocol. So, in many regards, Frax has the monetary policy characteristics, and as the Federation builds more and more, it actually has the potential to have superior price action as compared to Curve for very obvious reasons, because it's very comparable to Curve with regard to the gauges and the emissions and the incentives and the disintermediated cash flow it offers to participants. Yet the monetary policy is deflationary. So there you go. That's pretty much what I could say about the topic that I wanted to discuss. Hope that helps. It's it's not that's not an exhaustive discussion about monetary policies and federation, but man, that pretty good couple of ideas that we just discussed. Anyway, so let's hit some comments. I'm going to keep this stream short today. 27 people in the stream, 5 likes. We can do a little bit better. Oh my God, my system is so laggy today. I'm going to have to work on that. Anyway, JL, hey, Captain, what do you think about longing TLT here? I don't know. I don't long, I don't short, I construct portfolios. I either add to a position, I trim a position, so that has overtones of trading, but it's not trading. What I'm doing is repositioning. What I would call myself is an allocator. I allocate to positions, I adjust position sizes. One of the interesting posts today was from a legacy financial dude who said, what's the best way to hedge a position? Reduce its position size. Lovely. It was the simplest approach to portfolio management. Usually, is the easiest to execute and the simplest to maintain. So, if you're not comfortable, and that's the best way to really assess how well a portfolio is structured, your degree of comfort. How comfortable are you with the structure of the portfolio? Does it keep you up at night? Are you worried about losing capital? Then you're probably over positioned. Got to cut the position sizes. So I'm not interested in longing or shorting TLT. We're looking at Bitcoin, but let's go back to the 10-year. We're seeing some serious macro financial shit play out. Japan's currency is basically collapsing. Their bond market is pegged. And what do I think plays out? I think yield curve control is contagious. So and we see that in the dollar. So if we look at the DXY, this is basically euros and yen. That's the primary components of the DXY. This thing's ripping to the upside. It breached 101, and now it's back testing 100. I mean, 100 is an extraordinary number historically. It hasn't been 100 in quite some time, 2020. Um, so there's I expect significant volatility, meaning bonds could just keep dumping 3, 4, 5% on 10 years, and longer duration bonds. You could have even higher interest rates. What's pertinent is the mortgage rate, and we are currently at a mortgage rate that back in November, December, which was it, 2018, was so high at the current rate that it caused Jerome Powell to pivot off of QT to QE, and that's where we are literally right now. So we're in a bit of uncharted territory. If they don't pivot, why wouldn't they pivot? Can they not pivot? Are they going to be forced to pivot? How the hell are they going to manage that from a PR perspective? That they've been screaming for the last however many months. QT, we're going to offload the balance sheet and we're going to raise rates. How the hell are they going to do that? In a macro backdrop with regard to mortgage rates, 30-year mortgage rates that are identical to the spot where Jerome Powell converted QT to QE in the end of 2018. How the hell does that make any sense? So precarious spot. You got the entire market betting, calling bullshit on Fed monetary policy talking points. All this means is we're at a critical period of uncertainty. So manage that uncertainty, ladies and gentlemen, by controlling how you define position sizes, manage your risk, hedge your bets, hedge with position size reduction, and that's the deal. Yeah, Bitcoin, bro, my screen is ridiculously lagging today. I have no idea what the heck it is. I'm going to have to fix that. But whatever. You guys got audio, and that's all that matters. Killis, good morning. Raul, good morning. Rupert, Dan, any thoughts on Andre's latest Medium article? No, I'm going to steer clear of Andre for a bit. Ear end, hey, Mr. Rational, love your views and strategy for proper night's sleep and peace and during volatility. Thank you so much. You're very welcome. We could all do better, and I talk to you guys to help you guys, but it also helps me because it reinforces these ideas in my mind. If I ever ask anyone or tell anyone suggestions or recommendations, it's because I'm realizing that shit for myself. This is a channel all about rationality, boys and girls, and what we do for ourselves, we should encourage other people to do as well. Micbot, I do not. I use LaunchPass. I pinged them last year asking them to add crypto to the LaunchPass service, and I still have yet to get a feature request that I was looking for. So I'd like LaunchPass to add crypto support, but as of right now, they don't support it. Jim Bolton's in the house. McMahon, you understand what Solidly was meant to be. Maybe you could help them fork it. No worries. Deuce is going to handle it. Deuce and Lafa. That dude has a vision. And frankly, that's exactly what Andre's vision was and is. It's stablecoins and currencies. So I think it still has legs. Frankly, Deuce and Lafa, that is quite interesting what he has in mind. Now, Zero X DAO is the controls the entire monetary policy of Solidly, so that's that angle on the system. So there's still a lot of folks that have vested interest in the protocol. Hilda's in the house. Always a pleasure. Hey, y'all. Glad to be able to catch live again. We are live on a Wednesday. We're going to keep it short and sweet today. I handled the monetary policy and the constitutes a decent currency. And I think that's really all I wanted to talk to today. Just be careful in the markets. We're seeing, obviously, bear market rallies, but that doesn't mean we have too much downside. I posted some charts this morning about the chart of truth, the curve chart, and it looks really nice. But that also doesn't preclude that we could have a complete and total financial catastrophe on our hands. It's one or the other. That's the nature of markets. Either it goes up or it goes down. The question is, how far is it going to go down before it starts going up again? And you'll drive yourself nuts looking at technicals. So really all I like to look at is weeklies and monthlies, not really yearly charts in the crypto space. Yearly charts on the bond market, but weeklies and monthlies on the crypto space. And I like to see the overall trend of things. You can literally have this chart go down to a buck 50, and it's still bullish compared to it dropping to $1 in the red circle. So, it's very, very different perspective you get with short-term price action observations as compared to longer-term price action observations. And I consider Curve the chart of truth of the crypto space is just such an immense amount of liquidity that it's so easily representative of the overall sentiment in the markets. So that's overall what I'm thinking today. One curious view, my friend, always a pleasure. Wednesday, April 20th at 11:34 a.m. As always, I thank everyone for joining today. More to come on Friday. We have to talk, so I'll have something more to talk about on Friday. It's always a pleasure. After party on Discord for the most rational community in the entire crypto space. I love everyone on there. You guys got the rationality hat on every day, and it's much appreciated and much a pleasure. If anyone needs me, noahseidman.com. More than happy to help to the best of my abilities. I wish you all a wonderful day. I'll see you again on Friday. Peace.